Welcome to the introduction of the Endeavour add-on for MetaStock. Created by Simplicity Trading Systems. My name is Ryan Cappacio, and today I'll be showing you a simpler way to approach technical analysis. I'm co-founder of Simplicity and managing partner of Cappacio Trading Company. At Simplicity, we create simple-to-use trading strategies designed to shorten your analysis time and help you predict future movements. Our solutions help guide investment strategies. Cappacio Trading, however, is an equity trading firm where every day we put up our own capital in order to trade large, mid, and small cap stocks. Now that you know a little about me, let's get started. If you're the kind of person who wants to predict future movements, shorten your analysis time, and have total control over your trading, then we have a system for you. How do we do this? With our simple three-step system. Step 1, categories. Depending on their current situation, securities are divided into one of two categories: Endeavour, upward trends, or Discovery, downward trends. Step 2, color codes. Within each category, trading opportunities are represented by 3 colors, each predicting specific upward movements in price. Step 3, smart getouts. Each color is then linked to a smart getout, which recommends when to exit a security depending on that color's movement. Step 1, categories. Identifying the big picture movement. We start by categorizing a security's current situation as Endeavour or Discovery, providing you with realistic expectations for each category. Endeavour represents potential upward trends that could reach their all-time highs. However, Discovery represents potential downward trends that are likely to consolidate at lows. Today, we're going to focus on the Endeavour category. When you apply the Endeavour template, a ribbon appears on the bottom of your chart, identifying the category price is in. We can see here, when price was in Discovery, it trended down to a low and then began to consolidate. However, when price was in Endeavour, it created an upward trend that not only reached, but exceeded its all-time high. So to recap, when price is classified as Endeavour, we know it's likely to have an upward movement. The question then becomes, what kind of upward movement will occur? Step 2, color codes. In step 2, we're going to identify the correct upward movement. This is an important step because, as we've all experienced, you don't want to take a short-term trade if price wants to trend up for multiple months. So inside Endeavour, each color represents the movement that is most likely to occur. Now you can predict future movements without ever having to interpret any indicators. Green signals represent long-term trends. Blue signals represent short-term trends. And black signals represent full rebounds back to recent highs. These signals will appear on charts as arrows located below price action. Let's take a quick look at a chart. As you can see, our charts are simple and clean. We show our Endeavour ribbon on the bottom of the chart and our signal below price. We don't squish price with endless rows of indicators, making price virtually unreadable and filling your chart with clutter. However, signals are only useful if you know the correct price to enter a trade at. With our system, you no longer have to guess when the correct time to enter the trade is. All of our signals come with trigger points. Trigger points provide the exact price needed to be crossed to confirm the signal. For our example here, we're going to use a blue signal. Our trigger point is 1056. And as soon as price crosses 1056, the signal is confirmed. It's now safe to enter the trade. In example 1, we saw how price took out the trigger point and the signal was confirmed. However, in example 2, we don't take out our trigger point of 2209, so the signal is not confirmed, and we see how price failed. The days of guessing when to enter a trade are gone. If price doesn't cross the trigger point, then we don't enter the trade. It's that simple. Now let's see our colors and our trigger points in action. We'll start with green. For those of you interested in taking advantage of long-term trends, identifying them has never been simpler. A green signal will appear on your chart, along with an alert box that quickly defines the signal and reminds you to check the commentary for the trigger point. So we'll bring up our commentary. You'll notice that our commentary is simple and easy to read. We're given the exact definition of green and the guidelines required to confirm the signal. Green requires 3 consecutive closes above the trigger point to be confirmed. This is automatically shown by a green 3 appearing on the chart above the trigger point. The trigger point in this example is 33.27, which is shown by the green line in the chart. 7 days after our green arrow, we get a green 3, which confirms our signal. It's now safe to enter the trade, and you should expect a long-term upward trend to develop. As you can see, we get an upward trend that lasts for multiple months. Identifying potential long-term trends is that simple. Now let's take a look at our next color. Blue signals represent short-term trends. For those of you who like to take quick momentum trades, identifying them will only take a minute. A blue signal will appear on your chart, along with an alert box that quickly defines the signal and reminds you to check the commentary for the trigger point. Let's bring up our commentary. Inside the commentary, we're given the exact definition of blue and the guidelines required to confirm the signal. Blue signals simply require price to cross the trigger point to be confirmed. The trigger point in this example is 30.60, as shown by the blue line on the chart. The next day, price crosses the trigger point, confirming the signal. It's now safe to enter the trade, and you should expect a short-term upward trend to develop. As you can see, price got a jolt of momentum, and we get a short upward trend, just as predicted. Now let's take a look at our next color. Black signals represent a full rebound after a substantial pullback from a high. For those of you interested in swing trades, black signals are going to make trading a whole lot simpler. A black signal will appear on your chart, along with an alert box, which quickly defines the signal and reminds you to check the commentary for the trigger point. We'll bring up our commentary. Inside the commentary, we're given the exact definition of black and the guidelines required to confirm the signal. Black signals require price to cross the trigger point to be confirmed. In this example, our trigger point is 55.12, as shown by the black line in the chart. Now that we know the trigger point, let's take a closer look at the high on this chart. We shouldn't expect price to hit the top of those outlier bars. Instead, we want a more realistic price projection. All of this information is described in Black's commentary in full length and tells us to mark the 2 highest sets of clusters created by opens and closes below the most recent high, as shown on the chart by the red lines at 59.20 and 58.10. 3 days later, price crosses the trigger point, confirming the signal. It's now safe to enter the trade, and you should expect price to move up and test our target range at the high. As you can see, just as we expected, price rocketed up to that recent high and hit right inside its target range. So to recap step 2, when a signal appears, we can predict what kind of upward movement will occur. We no longer have to guess what kind of move price will make. Our signals will predict long-term trends, short-term trends, and rebounds back to recent highs. Now that we know when to enter a trade, the question then becomes, where and when is the correct time to exit? Which brings us to step 3, smart get outs. In step 3, we're going to identify the correct time to exit your trade. Smart get-outs provide a realistic view on where price is likely to move before an exit is necessary. The goal is to prevent traders from overreacting to natural swings in price. Early warning signals identify when a downward movement in price may occur during an upward trend. Now, when you're in a trade that's making a nice upward trend, you'll be able to predict when price is going to dip down. Imagine knowing that price is about to move down days before it even happens. Exit signals, on the other hand, identify when price is breaking down, signaling the end of upward momentum. You'll now know when price has finished its upward momentum and is likely to make a large push down. Early warning signals appear as diamonds, and exit signals appear as downward pointing arrows above price on charts. Both signals are used when analyzing green and blue movements. Now, let's see our smart get-outs in action. We'll begin with an early warning. Remember, these predict when price may take a dip during an upward trend. An early warning signal will appear in your chart, along with an alert box, which quickly defines the signal and reminds you to check the commentary for the trigger point. We'll bring up our commentary. Inside the commentary, we're given the exact definition of an early warning and the guidelines required to confirm the signal. Early warning signals require price to cross the trigger point to be confirmed. The trigger point in this example is 179.98, as shown by the red line in the chart. 3 days later, price crosses the trigger point, confirming the signal, and you should expect a dip in price. As you can see, price took a dip, but that's no surprise to us, since we knew that was likely to happen 3 days before it even began. Now, let's take a look at our exit signal. Exit signals identify when price is breaking down, signaling the end of upward momentum. An exit signal will appear on your chart, along with an alert box, which quickly defines the signal and reminds you to check the commentary for the trigger point. We'll bring up our commentary. Inside the commentary, we're given the exact definition of an exit signal, as well as the guidelines required to confirm that signal. Exit signals require price to cross the trigger point to be confirmed, and the trigger point in this example is 34.30, as shown by the red line on the chart. 7 days later, price crosses the trigger point, confirming the signal. It's now safe to exit the trade, and you should expect price to break down. As you can see in this example, price not only breaks down, but falls all the way into discovery. So we shouldn't expect price to begin an upward trend anytime soon. And there you have it, a quick look at the Endeavour add-on for MetaStock. So if you're the kind of person who wants to predict future movements, shorten your analysis time, and have total control over your trading, then begin your Endeavour today.